I'm Paul White, a partner in A&L Goodbody's corporate and advisory practice, where I regularly advise boards and organisations on corporate governance and compliance matters generally. I'm going to take a look at key aspects of the Corporate Sustainability Reporting Directive, or the CSRD. The CSRD is now in force, with EU member states required to bring it into national law by July 2024. The CSRD is about reporting. So, if you're an in-scope business, you will now have a legal obligation to report annually in your director's report on a range of environmental, social and governance matters. The directive does not set conduct or behaviour standards. Instead, the obligation is to report on what is or is not being done under various ESG headings. I think the really key message is that sustainability reporting will affect the whole of a business, not just a sustainability officer or a sustainability group function. Ultimately, the board of directors is required to include the sustainability report in its annual director's report. So, in addition to operational compliance, the board of directors will need to be satisfied on two fronts. First, that there are sufficient systems and controls in place to support the reporting standards. And secondly, the board will also need to be satisfied that alongside the annual financial reporting cycle, there is sufficient assurance for the board to allow them sign off on the sustainability report in a compliant manner at the end of the year. A key feature of the new EU regime is the requirement to have the information audited. So if you're an in-scope business, then alongside the normal audit of your financial statements, an audit of the sustainability report and statements will become a legal requirement. This audit requirement is also new in terms of global ESG reporting to date, and it will require auditors to have or acquire appropriate knowledge and experience. Given the scope of the incoming reporting regime, we are monitoring developments closely and keeping our clients informed via our ESG bulletin and our sustainability hub. There's clearly lots to be done by us all in terms of understanding, digesting and preparing for this European-wide mandatory sustainability reporting regime. There will clearly be teething problems, and some businesses will need to make a serious adjustment. So there really is no time to lose for boards and businesses to engage with this important and extensive change to reporting.